And welcome to a VSA Capital video blog, and delighted today to have Chris Evans, the Managing Director of Winsome Resources. Chris, hi, good to see you.
Hi, Andrew. Thanks for having me on.
Very good. Now, Winsome, it's a bit of a strange mix in a way. You're ASX listed, your asset is in Canada. I believe you were actually born in Rugby, UK. So we're going global today. You're obviously in the lithium game. And I mean, I think one of the first things I'll bring out, because it was announced a couple of days, it popped up on my screen actually, you're now, I believe, the fifth largest lithium resource in, is it North America? Or tell us how big you are and tell us where you are and what's so exciting about it. Come on, over to you, Chris. Tell us all about
it. Yeah, thanks, Andrew. We, as you say, we're ASX listed, but we're entirely focused in the James Bay region of Quebec with lithium. And we're particularly focused on our Adina project. We put out our maiden resource late last year, and at that point, we had 58 million tonnes at 1.12% lithium oxide, and that made us the fifth largest resource in North America. But since December last year, we've continued to drill, and 3 days ago, we put out an updated resource, which has taken us to 78 million tonnes at 1.15%. Now, that puts us as the third largest lithium resource in North America overall. But more importantly, I think, and we're quite proud of this, it's 80% of our resource is in the indicated category, which is the higher confidence category under the JORC code. And what that means is we're now the largest indicated lithium resource in North America.
I apologise, I got it wrong. You've gone up the charts in top of the pops. And just for new listeners, obviously this is to whet their appetite slightly. You know, we all talk about lithium. You mentioned there lithium oxide. But obviously we all know there's different sorts of lithium. So you also go through exactly what your lithium is, because it's a hard rock, I think. Yeah. And also you mentioned there you're in the James Bay area of Quebec, why that's also important.
Certainly. For those viewers who don't know, roughly 50% of the world's lithium comes from hard rock sources, and majority of that is from Western Australia. And then the other 50% comes from brine lakes, the majority of which are in South America, Argentina, Chile, and Peru. And the hard rock lithium mining is the simpler version, if you like. It sort of has higher operating costs normally, but it's easier to get into production because you are literally mining rock out of the ground by fairly simple gravity processes. Mostly you're concentrating it, and then it has to be converted into lithium hydroxide or carbonate, which goes into the batteries. So we are a hard rock lithium mine, much like we have in Western Australia. It's a very simple ore body, so the majority, half of ours is at surface, or within a couple of metres of the surface, and it consists of one huge pegmatite body which contains the lithium. So it makes the mining low cost and it makes the mining very simple. We particularly like Quebec because there are a couple of other lithium deposits there. It's an established mining jurisdiction. It has, very importantly, 98% of power comes from hydroelectricity, which is ultimately going to make our lithium a low carbon lithium. And the government's very supportive. You know, we get 38% of our exploration expenditure back in tax credits. There are various grants available for mining. And the Quebec government, as well as the federal Canadian government, has over the last few years made a real push to create this battery supply chain within Canada, but complementing the broader North American battery supply chain that's fighting to establish itself ex-China.
Okay, so you're big. We may come back to that. You're in a good jurisdiction. What's your grade and all that like? Is that ticking the box as well?
Yeah, the grade, I think anything, you've got to be above 1% to have a credible resource. We're 1.15%, which is more than acceptable. And the grade tends to relate to the ultimate recovery you get when you're concentrating it. So our grade is up there. It's a world-class grade. It's not the best in the world, but it's certainly world-class. The thing that us and all of our peers always get asked about in the James Bay region of Quebec is there's two things. One is permitting and one is infrastructure. And we very recently, about 6 weeks ago, we announced what we think is quite a revolutionary deal, whereby we acquired an exclusive option to purchase a diamond mine, which sits 60 kilometres to the south of our resource, and it went into administration late last year. Now, it sounds a bit strange, a diamond mine, but the reason we really like it is that it's a 2 million tonne per annum dense media separation operation with an airfield, a 400 personnel camp, a tailings storage facility, a 2 million tonne per annum DMS operation, a water treatment plant. All of that is sitting 60 kilometres to the south of us. And DMS, dense media separation, is actually what we would be building anyway to concentrate our lithium. So it's one of these once-in-a-lifetime opportunities that the diamond resource is marginal, but the facilities are fantastic, and there's been $1 billion spent on it. So we've secured an option for 6 months to decide whether we want to take on this asset, and if we do, it's going to cost us 52 million Canadian to buy it, essentially from the government. And when we do that, if and when we do that, once our studies are complete, we'll be able to decide. It then has the potential to save us over $500 million in capital cost and simplify and de-risk our approvals process. It sort of overall, it gives us a very credible pathway to production with one of the biggest lithium resources in North America.
And correct me if I'm wrong, but you've got a major road as well, haven't you, going through your property? So you're also going to have no problems in the logistics of getting it to this mill.
We need a road. So the 60-kilometre distance, we need a road over that distance, which we need anyway in a greenfield or a brownfield scenario. But building a 60-odd kilometre road is nothing unusual in the context of any mining operation in the world, but particularly in James Bay, where it's a very large area, and the only piece of infrastructure we need is to build a 60-kilometre road.
Okay, and also you mentioned there are other lithium companies in Quebec. I mean, Quebec is a good, as you say, mining jurisdiction, but there's quite a few other similar properties to you close by, presuming that could use the mill as well, so that it really will get a good input.
I think so. There's a couple of big, like us, a couple of big world-class projects in Quebec that will probably have their own concentrating solution, but the opportunity, I think, is around us in the immediate area and leading down to where the mill is. There's a number of, it would be unfair to call them hopefuls, but there are a number of junior players with some signs of lithium that unless you have a big world, massive resource like us, it's very hard to justify the capital costs that would be required for a new plant. So I think the opportunity exists, as you suggest, to start to cooperate with those sort of groups whereby there's an opportunity for them to put their material through this plant and make it a bit of a hub, a regional hub.
I mean, the good thing is it all, for want of a better word, de-risks and removes some of the financial burdens because it just shares it all out, which is one of the reasons it just looks so attractive on a global basis.
It really does, yeah. And the fact that we don't have to build an airfield, a camp, a tailings storage facility, a processing plant. There's already a power plant there that's on LNG at the moment, but one day we hope to get hydropower there. The fact that we don't have to have any of that built or permitted because it's already there just de-risks the whole process, as you say. And, we have to have some permits changed over. We'll be processing pegmatite instead of the kimberlite that's currently processed there. We have to show that that's no more damaging to the environment, but that's a relatively simple process compared to building a new $700 or $800 million facility.
And you mentioned permitting. I mean, how we all know permitting and getting these mines can take quite a long time. How confident are you that you can do this relatively quickly?
Quebec doesn't have a great, particularly when it comes to lithium, it doesn't have a great track record in terms of the time for approvals. In theory, you should be able to get, once you submit your project description, which we're about to do because it's sort of based on the PEA we're about to put out, from there it's reasonable that within around around 3 years, you should be, um, according to the process that's in place, you should be able to get your approvals. Now, no one's done that yet. And this is why we are saying that I think we have a good chance of achieving that, because we're de-risking and simplifying our approval process. We've already started our environmental surveys to gather the baseline data that's needed. Of course, if we take up the option to buy the Renard Diamond facility, all of the engineering's there. We're so advanced in a lot of the designs that, again, it just de-risks that process. It gives us a good chance of meeting the timelines we might that might be considered optimistic for others.
And it's still relatively early stage, but are you starting to talk with offtake partners potentially so that you can get all the bits of the jigsaw together to sort of, again, de-risk everything? Because, clearly North America, we know, and particularly the United States, they're looking for this sort of a product. That's what the American government is saying. Are you having constructive conversations there?
Yes, we are. Probably our biggest strategic aim is to make sure that our product remains in Quebec to be converted into hydroxide and fits into that supply chain I referred to earlier that's being built by the government. There are a number of the Quebec government's done a fantastic job of attracting really big players to build battery components and battery cells here. So Ford, GM, POSCO, EcoPro are all in Quebec building cathode facilities. Now, what they all require, and Northvolt is here as well, I should say, what all of those require is a source of lithium that comes from within Quebec. And as yet, that none of them have it. So there's a real opportunity for us to find a partner with the technical and financial capabilities to convert our product here in Quebec such that it's fed into that supply chain. I've been in Korea and Japan recently talking to parties who might be able to assist there. We're having, as you say, very constructive conversations. And once we put out our studies, I think that'll be a trigger to really hone in those conversations.
And just quickly, we ticked a lot of the boxes, like, huge asset, good grade, good jurisdiction, as you say, great infrastructure. The other box we should just tick, of course, is management, yourself, Chris. But you've got a bit of a track record in the mining industry and in lithium. You've been playing this now for some time, haven't you? So do you want to just give a little bit of a colour on your background so people can say, actually, he's the man we want backing us or running us, taking our money?
Well, I think overall we've got a lot of lithium experience in our board and management. But in my case, I come from a mining development background. I built a couple of iron ore mines in Western Australia. Then I was lucky enough to build a lithium mine in Western Australia, much like the one we're contemplating building here in Quebec. I did that between 2015 and 19. And then I was heavily involved in a lithium development project in West Africa. I was the managing director of that. And then I moved on 3.5 years ago to Winsome when we listed on the ASX. So I've been involved in lithium for about 9 years now, which is a fair amount by lithium standards. Our chairman, Steve Biggins, he was managing director of Core Lithium, which is one of Australia's latest lithium producers. He brought that from exploration into production. Simon Ikepeta, our chief development officer, was CFO for Core. So we've got all this lithium development experience. We have done it before, albeit in different jurisdictions. But I think it gives us that experience to know what's going to trip us up and what we need to watch out for. And it's no accident, as a result, that we've currently got $40-odd million in the bank, which we raised last year when the lithium price was much better and our share price was doing well, because we knew there was going to be a downturn. We've lived through it before. And so while many of our peers currently are in cash preservation mode, we've been continuing with our drilling, upgraded our resource, managed to get our hands on a $1 billion processing facility just to the south of us. All this is going on, yet to be reflected in our share price, I think, because the market's down. But my sense is that investors now are sitting on the edge. The market's starting to turn. They're not jumping in yet, but when they do, there's a few projects that are clearly going to make it in the next run, and we're going to be one of those.
You mentioned that was something I was going to come on to, is your balance sheet. As you say, you've got a really good balance sheet, $40 million. Better just clarify, because there's a big difference between Aussie dollars, Canadian dollars, and US dollars. Just for the sake of what dollars have you got?
That's Aussie dollars.
Aussie dollars, so just so that everybody understands.
That's the
And look,
word.
I guess also, I mean, again, you must be talking to some of the sort of debt providers for when you're going forward, because with a project of this size and the stability, it's not as if I'm sure as you go into development, there will be more capital required, but you must be quite attracted to some of the debt players as well. Are there some healthy conversations going on there?
Actually, no, not with debt providers yet, because we've still got a few years of approvals to go. Um, there, I mean, our capex is going to be vastly reduced if we take up this Renard option. And so we'll more likely be looking at a capital cost of a couple of $100 million rather than $700 or $800 million. And given that we're listed on the ASX, money is not particularly hard to find from an equity sense. And I think, call it $200 million if that's our capex, and we're still yet to complete the studies. But I mean, we'll be able to get a good portion of that from equity if we need to. And therefore the debt component is not going to be large. So no, we haven't yet started talking, but I think we won't have a problem securing some good debt at the appropriate time.
I mean, let's just touch on the lithium price. I mean, you played in the lithium space, as you say, for nearly 10 years. I think a lot of people did get calls out when it came tumbling down, when everyone was still incredibly bullish and thinking it was going to go to the moon. How do you see it playing out yourself? Just, no one can predict completely, but what is your sort of view of where lithium is going?
Well, when it went down to whatever the spot price went to, $800 or $850 a tonne, virtually no mine in the world is making money at that. And it didn't stay there for long. And now that it's come back up to around 1,100, there's a good percentage of mines are making money at that, but not much, and some aren't. My view is that it's going to gently climb for the rest of this year. And by the end of the year, we should be back up at a level that makes most people money, like $1,500 a tonne or so. And then I think in 2025, we'll see a much better year. But I think the worst is over, is my view. I think the stockpiles that the Chinese were probably had sitting there, perhaps for manipulation of the market, are drying up. And the evidence that I see of this is some of the auctions that are occurring now, Pilbara Minerals and others in Western Australia auctioning material.
Yeah, I think that's, a fairly consensus view is that at the moment. I think most people wouldn't disagree with that. Chris, we've been chatting now for nearly 20 minutes. We want to keep it fairly tight. I hope that's whetted a lot of people's appetite. This really is a world-class asset. If you've got further questions when you've watched this, do email us or call us at VSA Capital, or do get in touch with Chris himself. But Chris, thanks for taking the time, and we really do look forward to how this goes forward, because it really is a really exciting project.
Thanks very much, Andrew. It's been a pleasure. Look forward to the next one.
Very good.